G'day and welcome to another Morgans Edward Street weekly wrap. Today is the 9th of November and for a wrap of what's been happening this week, I'll throw you over to Tristan.
Thanks Cameron. The Dow Jones had a strong week, advancing from 25,261 up to 26,191 points over the 5 trading sessions. The majority of this came with a 545 point spike on Thursday, which was driven by the midterm elections which delivered a divided Congress as expected. The implication is that this will provide more oversight into Donald Trump's policies and therefore remove the chance of any black swan type policies being voted up. European markets were more subdued, but up nonetheless. In commodity markets, base metals were mixed through the week, with no key drivers to move the market decisively. Iron ore has been weaker, despite a train derailment in Port Hedland on one of the BHP lines. BHP has commented that it will take at least 1 week to fix the line, which is more than the excess supply waiting on hand. Our market has been busy with a few notable events. Hedge fund VGI continues its attack on corporate travel. For more information there, feel free to read the research from our analyst Belinda Moore or the announcements from the company. Commonwealth Bank had its AGM yesterday and confirmed that cash earnings are so far broadly in line with consensus. Domino's Pizza looks like it will need a strong second quarter to reach its growth targets, which is becoming a common theme here. Our analyst Joe Little has a reduced recommendation and a $50 target price. Takeover target APA Group has been dealt a blow by the Treasurer, who indicated that he will knock back their takeover bid from CKI, based on national interest grounds. Our analyst is happy to pick up APA shares at around $8.30 if they drop to that level. Realestate.com had a strong quarterly result which moved the share price up 8%, as revenue growth from their new products continue to gain traction. Let's hear what stock Cameron likes this week.
Thanks Tristan. I'm going to give an update to a stock which I mentioned back in July 2017, and that is Afterpay Touch, ticker code APT. I thought it was timely to provide my views given the stock has dramatically changed over the past 12 months, which has delivered significant returns during this time. Within the past 12 months, Afterpay has transformed into an international business with exposure in the US and plans to expand into the UK. I note that these offshore plays will likely be the driver for further capital growth, and as yesterday's update suggested, they seem to be tracking in the right direction. In the market update yesterday, APT highlighted continuing strong business momentum across the board. The key positive being the traction in their US business, which was highlighted with an increase in US retailer numbers of 1,300 at the end of October, which compares to 455 stores just 2 months earlier. Underlying sales in the market reach 115 million, which is up from 20 million at the end of July, with consumers doubling during this time. To put this in perspective, the US retail market is 20 times the size of the Australian retail market, and Afterpay has managed to already lock in businesses such as Urban Outfitters, Steve Madden and Kylie Cosmetics. So where's the risk? Apart from its high multiples, domestically there will be an ASIC review into the buy now pay later sector, as well as the Australian Senate inquiry into parts of the finance sector. In light of this, I've taken some profits in overweight positions given the stock has ran over 300% from July 2017. I'll look to add further exposure once the ASIC inquiry has been completed, as this uncertainty should weigh on the stock over the coming month or two. Overall, I think it's a terrific success story, one that our analyst agrees with, which is reflected in a $19.15 price target and an ad recommendation. So if you've been living in a cave and you haven't heard of this name, I'd be recommending putting it on the watch list and looking for further investment once the regulators are satisfied. Thanks Tristan.
Thanks Cameron. That wraps up another week. Please remember that our comments in the video are general in nature, and speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. See you next week.